When it comes to Pokemon collecting and investing, you might not be as knowledgeable as you think you are. And that goes for all the experts here on YouTube, myself included. At least, that's what psychology tells us. To illustrate this, let's take a look at the Dunning-Kruger Effect. The Dunning-Kruger Effect is a psychological phenomenon that demonstrates the shocking disparity in perceived knowledge and actual expertise. Here's how it works. When surveying participants in a variety of different fields, those with the least knowledge are often the most confident in their abilities, grossly overestimating their skills in relation to that of their peers. Meanwhile, those with the most knowledge often underestimate their own expertise. It's fascinatingly counterintuitive, but is perhaps best understood when thinking about the individual's level of experience within their field. Those who are inexperienced are often unaware of the complexities, the nuances, the history, and the contributing variables that influence their field, while those with years of experience come to appreciate the vastness and complexity, realizing how insignificant their own knowledge is in comparison. The same is true with Pokemon collecting and investing, and contrary to what many experts claim, successfully collecting and investing is not as simple or formulaic as many suggest. And today, I wanted to share with you 3 psychological principles that can easily translate into major investing mistakes. These 3 psychological pitfalls include confirmation bias, herding bias, and recency bias. Together, these forms of bias threaten to limit our perspective and our better judgment, resulting in decisions that could cost you a lot of money. I'm Pokemon Classics, and I invite you to join me as we take a deep dive into the psychology of Pokemon investing, along with some simple steps to ensure that you don't become another casualty of the Dunning-Kruger effect. Let's roll the intro. You've probably seen it before, a YouTuber talk about how sealed product can only go up while ignoring past market downturns, reprints, or certain sets that just never really gain traction. Or the YouTuber who guarantees a vintage slab will 5x in the future while ignoring the market volatility and population growth for that particular card. Confirmation bias is perhaps the most prevalent form of bias, particularly amongst investment channels. Essentially, this form of bias occurs when an individual seeks out new evidence to support a pre-existing belief or theory, rather than allowing the data, in its totality, to shape one's beliefs or theories. When it comes to Pokemon collecting and investing, this is problematic for 2 obvious reasons. First, it often leads to selective exposure, in which individuals intentionally ignore facts and evidence that opposes their own beliefs. And second, it inhibits cognitive dissonance, our brain's primary method for reflection and growth. Perhaps a good question to ask yourself is, where do I get my information from? There are countless websites and YouTube channels out there providing sales data, investing strategies, and market commentary, but most people will limit their research and consumption to only the sources that share their own perspective. It's an understandable and yet potentially dangerous behavior to engage in. In logic and argumentation, this is similar to the cherry-picking fallacy, in which data is selectively chosen and other data is selectively ignored in order to bolster one's position or argument. However, I think they would agree that to fully understand the complexity of the market and its nuances, it's often best to explore a variety of perspectives, including those that we aren't inclined to agree with. And that's where cognitive dissonance comes in. Cognitive dissonance is the feeling of discomfort we get when we encounter new data or information that contradicts our existing beliefs or theories. It forces us to adjust our perspectives and to see the market more clearly, more accurately, and more holistically. For example, if someone believed that modern Pokemon was not an investment and could never generate a return, how would they react to recent data over the last few years for modern booster boxes, almost all of which have seen a considerable appreciation? Inversely, how would someone respond to obscure promos or historical oddities outselling even the most popular modern cards if popularity was always the de facto metric for a card's value? In short, we can combat confirmation bias in 2 ways. Seek out diverse perspectives, particularly those that you disagree with, and perform holistic research. Nobody likes to be wrong, but becoming aware of our potential blind spots and Being willing to adjust our beliefs when warranted is one of the most liberating actions any collector or an investor can take. There are a number of great YouTube channels out there and some unbelievably sophisticated websites for researching populations, sales data, market trends. They're readily available. I'll go ahead and leave a few of my favorites down in the description below. Herding bias is another dangerous trap waiting to ensnare unsuspecting collectors and investors. This type of bias is essentially the opposite of confirmation bias. Instead of relentlessly holding one's opinion regardless of the evidence, herding bias occurs when an individual mindlessly follows the advice or behavior of a larger group. Now, psychologists believe individuals do this as a means of risk mitigation, convincing themselves that if others are doing it, it must be a wise investment strategy. Ironically, though, this herd behavior often leads to artificial demand and inflated valuations, as individuals are making purchasing decisions not on the fundamentals, but rather on group momentum. 2020 and 2021 is an excellent case study in this phenomenon, with almost every microcosm of Pokemon skyrocketing due to celebrity influence, media attention, and a FOMO mentality. Some of these cards went nonsensically high considering their questionable at best fundamentals. In particular, I'd be cautious of cards that are mass-produced, readily available, and in poor condition. Generally, that's just not a winning formula for a collectible. But that's the power and the danger of herding bias. It only takes a few influential individuals to promote a Bulbasaur as a $30,000 card to create the type of hype, and then unleash a wave of unsustainable momentum buying. In fact, herding bias is often one of the primary contributors to asset bubbles, where the perceived safety of following the crowd can just as quickly turn into real danger. It's kind of crazy how much these two images mirror one another, but that's the risk of following the herd. Masses move markets, but sometimes those movements are quite volatile. So, here's the takeaway. Don't blindly follow the crowd or the card. Instead, you have to educate yourself. There have never been more resources freely available to learn about collecting, whether researching cards' conditions, population reports, or market data. It's important to be critical of what everybody else is doing. It certainly doesn't hurt to explore all avenues, including those promoted by the experts, but in doing your own research, you'll be in a much better position to decide what's best for you. Don't fall victim to herding bias. A third well-known psychological trap is recency bias, in which individuals tend to overgeneralize recent data at the expense of ignoring longer historical trends. Now, this one is a little bit tricky because prices and markets do fluctuate over time, and recent sales are generally the best indicator of current market values. However, when making financial decisions or collecting decisions, it's often wise to take a look at the long-term data and consider the possibility that the current market is not always representative of an item's potential future. For example, it's not uncommon to see the Pokemon market move in larger cycles. Anyone who was around in 2016 when Pokemon Go was released, and when Nintendo celebrated Pokemon's 20th anniversary, can attest to just how similar this cycle was to the one we experienced in 2020 and 2021. After experiencing slow linear growth for years, with grading becoming more prevalent and online communities like E4 and YouTube providing a space for collectors to socialize and share their experiences, Pokemon was in a state of slow but steady organic growth. However, the release of Pokemon Go and the media attention surrounding Pokemon's 20th anniversary sent a massive wave of interest, driving prices up almost instantly. This spike in interest in sales is pretty shocking to behold, but in the following years, the market experienced a pretty significant rebalancing of both supply and demand, with prices for most items correcting rather heavily. I remember discussions and debates on E4, with some individuals convinced that Pokemon had crashed and would never experience those valuations ever again, while others were confident that the markets would eventually return due to the strong fundamentals behind certain items. If we fast forward a few years, though, we've experienced the same market cycle from 2020 to present, but this time on a much grander scale, with COVID lockdowns, celebrity influencers, and Pokemon's 25th anniversary this time contributing to this new hype phase. The point is that having too narrow of a focus can blind us to the larger market trends in either direction. I've seen a number of YouTubers do this, perhaps unintentionally, but they generalize the current market phase that we're in, guaranteeing future outcomes. Just because modern boxes, for example, are performing well right now, doesn't mean they always have, or that they always will. And just because a first edition Charizard has dropped in price since its massive bull run, doesn't mean it will do so indefinitely. Of course, the opposite is also true. When cards get hot, they're not always hot, and they're likely to quickly cool off. I think the most telling example of this is the trend of seeing items that are first to market spike in price, due at least in part to short-term data, before plummeting once more as more and more copies become readily available. Even though that particular item might not have a deep and expansive history, an understanding of market trends could help forecast this type of behavior. So once again, the takeaway is to arm yourself with knowledge and experience. Make yourself aware as much as possible about past market history and the common phases of each market cycle. Generally, the market fluctuates between phases of consolidation, saturation, and liquidation. And when combined with an understanding of the basic fundamentals like rarity, scarcity, condition, popularity, and history, we can better assess which items may be worth buying and holding in the long term and which items are perhaps worth selling. It's not a perfect science, but history often does repeat itself, and at the very least, having a little bit of context never hurts. Anyway, these are just 3 of the many psychological traps out there that can quickly transform into costly collecting and investing mistakes. Being closed-minded to new information, blindly following the crowd, and overprojecting short-term data into the long-term market are all mistakes you don't want to make. Instead, consider seeking out alternative perspectives, particularly from those that you disagree with. Also, take a critical approach when considering what the masses are buying and selling. And finally, familiarize yourself with the broader market and all of its complexities, at least as much as possible. The biggest collecting and investing mistake is simply selling yourself short. If you have a passion for Pokemon, you can do this too, and you'll probably be surprised by how much you actually enjoy it. Again, I'll leave some helpful links down in the description below, and that's going to wrap it up for this one. I'm Pokemon Classics, reminding you that the classics never go out of style. Stay well, everyone, enjoy collecting, and don't forget to have fun. That's why we're all here. We'll see you with the next video. Take care, everybody.